Tired of your income statement feeling like a never-ending story? Let's shut the book on the income summary account and bring clarity to your financial picture. First, identify the balance in your income summary account. This account temporarily holds the total revenues and expenses for the period. If the credit side is larger, you have net income. If the debit side is larger, you have a net loss. Let's assume for this example, we have a net income. Next, debit the income summary account for the amount of the net income. This will bring the income summary account balance to zero simultaneously. Credit the retained earnings account for the same amount. This increases the retained earnings, reflecting the profit earned. If you have a net loss, the process is reversed. Debit the retained earnings account to reduce it and credit the income summary account to close it out. By transferring the balance to retained earnings, you are incorporating the period's performance into the company's accumulated profits. This ensures your financial statements accurately reflect the financial position of the company. With the income summary account closed, you're now set to start fresh for the next accounting period. And that's how you close the income summary account, contributing to the integrity of your financial reports. Don't forget to subscribe for more bite-sized accounting tips.